Welcome to the Deep Dive. Today we're digging into a couple of really significant announcements from Coherent Corp, a major player in photonics.
That's right.
We've got their latest fiscal year earnings results, which just came out, plus news about them selling off a pretty big piece of their business.
Yeah, it's a lot to unpack.
So these two bits of news together, they give us a really fascinating look into, their financial health and maybe where they're headed strategically.
Exactly. So our mission for you in this deep dive is to unpack these developments. We should probably start with the financials, the immediate picture, right?
Good idea.
And then explore what these shifts, both the earnings and the sale, mean for Coherent's future and, for the industries that rely on them.
Okay, so let's start right there with the numbers that just hit the street. How's Coherent been performing? What did the report tell us?
Well, the results for their fiscal fourth quarter and the full fiscal year 2025 that ended June 30th, they paint a picture of really robust growth. Pretty strong.
Just how?
For the full fiscal year, Coherent reported record revenue, $5.81 billion,
Wow.
which is a significant jump, 23% increase year over year.
23%. That's substantial top-line growth.
It really is. And it suggests they're not just, riding a market wave, but maybe actually gaining some serious ground, some market share.
Okay, so that revenue growth, 23%, definitely strong. But revenue's one thing. What about profitability? Did that follow suit?
It did, and maybe even more impressively, so on a non-GAAP basis.
Right, stripping out the unusual item.
Exactly, to get that clearer operational view. Their full-year gross margin was 37.9%.
Okay.
Now, that's up 358 basis points year over year, so a 3.58 percentage point improvement.
Which tells you they're getting more efficient.
Yeah.
Or selling higher value stuff.
Or both, yeah.
Yeah.
It points towards better operational performance. And maybe even more striking, their non-GAAP EPS earnings per share for the full year just soared. It came in at $3.53.
$3.53. And how does that compare?
Well, that's a $2.32 improvement year over year.
Whoa.
Which is, the CEO highlighted it, 191% expansion.
191% jump in EPS for a company this size.
It's genuinely phenomenal, yeah. It really indicates strong operational leverage profits, growing much, much faster than sales.
Okay, so the full year was impressive. What about just the last quarter, Q4? Do the momentum hold?
Absolutely. Q4 fiscal 25 also saw record revenue, came in at $1.53 billion.
Okay.
And the non-GAAP diluted EPS for that quarter was exactly $1.
$1 even. And did the CEO give any color on why Q4 was so strong?
He did. Jim Anderson, the CEO, he specifically pointed to their, quote, exposure to key growth drivers such as AI data centers.
Ah, the AI factor.
Right. And he sounded pretty confident saying they're, quote, well-positioned to continue to drive strong revenue and profit growth. So it's not just looking back, they're pointing forward based on this.
Okay. And looking at the balance sheet, it seems like they were also busy with debt.
Indeed they were. They managed to pay down a significant chunk, $437 million of their outstanding debt over the full fiscal year.
Almost $500 million.
Yeah. And that focus on paying down debt, especially when you combine it with the divestiture we'll talk about,
All right.
it really underscores a clear strategy. They're strengthening their financial foundation. It's not just about expanding. They're making sure the base is solid.
So we've got this impressive financial picture. Record revenues, soaring profits, paying down debt. But, beyond the numbers, what's actually driving this? What are the innovations, especially in those AI data center areas the CEO mentioned? That's where it gets really interesting, right?
Totally. And their Q4 product highlights give us a direct look. So, first big one. They achieved their first revenue from 1.6T datacom transceivers.
1.6T, so terabits per second.
Exactly. These are like the ultra-fast data superhighways inside the AI data centers. They let just massive amounts of data flow incredibly quickly between the processors.
Which you absolutely need for those huge AI models.
Precisely. It's critical for the real-time demands of AI workloads. So getting first revenue there is a big milestone.
Okay, so that's directly tied to the AI boom. Tangible product success. What else? Any other key innovations?
Yeah, another interesting one. They also got initial revenue for their liquid crystal optical circuit switch platform, OCS.
Optical circuit switch? What does that do differently?
Well, think of it as dynamically reconfiguring the light paths, the optical connections, inside a data center. It helps optimize bandwidth and efficiency on the fly. And Coherent actually put a number on this. They estimate this platform alone expands their addressable market in data centers by over $2 billion by 2030.
$2 billion.
Yeah.
just from that one platform.
That's their projection. It shows they're thinking strategically years down the line about market capture.
Very specific. Yeah. Any other new products or materials? Maybe something not just for data centers?
Yes, definitely. So sticking with AI data centers for a second, they introduced a new diamond silicon carbide composite material.
Diamond silicon carbide.
Yeah.
Sounds advanced. For cooling.
Exactly. For advanced cooling of XPUs, CPUs, GPUs, all those processing units, specifically in AI data centers where heat is just a massive challenge.
Right. Keeping those things cool is crucial.
Absolutely. And then stepping outside data centers, they launched what they called an industry-first 600W Excimer Laser.
Okay, an Excimer Laser. What's the application there? Energy.
Yeah, specifically for energy applications. It's optimized for making high-temperature superconductor tape.
Superconductor tape, like for fusion.
That's one of the key emerging applications, yeah. Fusion power, other advanced energy tech. So it shows they're not just focused on IT, they're also playing in these cutting-edge energy solutions. Broader reach.
Interesting. And if we look at their segment revenues for the whole year, does that back up this focus on AI and data centers?
It really does. Their networking segment revenue jumped significantly. It hit $3.42 billion for the year.
Compared to what last year?
Compared to $2.29 billion last year.
Wow, okay. That's a huge jump, over $1 billion more.
Yeah, it clearly shows where a huge chunk of that growth, driven by those AI data center innovations we just talked about, is coming from.
So connecting the dots, it really looks like their strategy focusing on these core growth markets like data centers and communications, it's paying off.
Absolutely. The numbers, the product highlights, they all line up. It demonstrates a pretty successful strategic pivot and investment plan so far.
Okay, so they've had a great year. They're innovating. What are they expecting for the next quarter? Q1 of fiscal 2026. What's the near-term outlook for you, the listener?
Well, they gave guidance. Coherent expects Q1 fiscal 26 revenue to land somewhere between $1.46 billion and $1.60 billion.
Okay, so potentially flat to slightly down sequentially from Q4's $1.53 billion, but still a strong range year over year.
Right. And they also guided on non-GAAP gross margin, expecting it between 37.5% and 39.5%. Pretty consistent.
Solid margin. And operating expenses.
Expected between $290 million and $310 million. And the bottom line, non-GAAP EPS, they're guiding for $90.93, so $1.13 for Q1.
The 93 cents to $1.13. Okay, so this guidance gives you a roadmap, a sense of their near-term expectations based on everything we just discussed.
Exactly. It reflects their current momentum and those strategic shifts.
All right, so great financial performance, clear innovation pipeline, solid guidance. Which brings us to the other major piece of news. Why would a company doing this well suddenly decide to sell off a big chunk of its business?
That is the fascinating counterpoint, isn't it? So Coherent announced they've entered into a definitive agreement to sell their Aerospace and Defense business.
Aerospace and Defense. And who's buying?
A company called Advent. They're a leading global private equity investor, and the price tag is substantial. $400 million.
$400 million. And what are they doing with that cash?
It's specifically earmarked for more debt reduction. We saw they already paid down a lot. This adds to that war chest.
Really balance sheet strengthening.
And they also said the deal is expected to be, quote, immediately accretive to Coherent's EPS.
Immediately accretive. So it boosts their earnings per share right away, even before maybe all the cash is deployed.
That seems to be the projection, yes. It suggests the A&D business might have had lower margins or earnings contribution relative to its size than the core businesses they're keeping.
Okay, so what exactly is this aerospace and defense business they're selling? What does it do? How big was it within Coherent?
Well, it's a division that designs and makes highly specialized optical and laser systems, specifically for defense applications. Think targeting, guidance, surveillance, that kind of thing.
Critical stuff.
Very critical. And it's not a small operation, about 550 employees, operating out of 10 different sites globally.
So a significant unit, not just a side project.
Definitely not. It's a considerable piece of their previous portfolio. And, it operates in a very different market with different cycles and customers compared to, say, data center components.
Which probably plays into the why now question.
Yeah.
Jim Anderson, the CEO, he commented on this, right? Said it furthers our strategy to concentrate efforts on core growth markets.
Right. He called it part of their ongoing strategic portfolio optimization process.
Strategic portfolio optimization. What does that really mean in practice for a company like Coherent? Is it just corporate speak?
Well, it can sound like it, but here I think it signifies a real focus. It suggests Coherent is actively deciding where to put its money and its best people. They're doubling down on areas like AI infrastructure, industrial lasers, advanced commercial photonics, where they see the biggest growth and where their specific expertise gives them an edge.
So shedding assets, even if they're decent businesses, if they don't fit that core future vision.
Exactly. It lets them focus resources and accelerate in those high priority areas. You could think of it like maybe an investor selling a stable but slower growing stock to put more money into a high potential tech startup, sharpening the focus.
Makes sense. And what about the buyer, Advent? Why are they interested in this A&D business? What's their angle?
Well, Advent's managing partner, Shonal Milani, called Coherent's A&D business exceptional with a distinguished heritage. So they clearly see value there. Advent views it as, quote, complementary to our existing investments in the sector. And they pointed to their track record in national security. They've invested in companies like Cobham, Ultra Electronics, Maxar Technologies before.
Well, they know this space.
They definitely know this space. And what's really interesting is their stated plan to, quote, invest significantly in R&D in the business.
So they're not just buying it to strip assets. They plan to grow it.
That's the
Huh.
implication. It suggests Advent sees untapped potential, maybe thinks it can thrive better as a standalone, focused defense tech company under their ownership, perhaps with a different strategy than Coherent had for it.
And just a practical note, the business will keep operating under the Coherent brand, at least initially.
Yeah, that's what they said. So some continuity there during the transition.
Okay. So let's try to tie this all together for you, the listener. What does this whirlwind of news mean? We've got Coherent making this really bold strategic move, selling off a major business unit to sharpen focus, cut debt.
Right, while at the same time reporting these record revenues and fantastic earnings growth, mostly driven by that boom in AI data center tech.
It really highlights how dynamic things are, doesn't it? Corporate strategy, tech evolution, all happening super fast.
Absolutely. Coherent is clearly positioning itself right in the middle of that photonics and AI-driven growth wave. They're streamlining, focusing, making a clear bet on where they think their future lies.
Which brings up a really interesting question for you to think about. As companies like Coherent narrow their focus like this, concentrating on hot areas like AI infrastructure, what happens to the sectors they spin off, like defense in this case, often into private equity?
Yeah, what are the broader implications for innovation in those spun-off sectors, for instance? Does this kind of specialization and ownership shift ultimately help or hinder technological advancement overall in those fields? Is it a net positive?
Something definitely worth mulling over as you continue your own deep dives into this ever-changing world of technology and finance.
Definitely food for thought.
Thanks for diving deep with us today. Until next time, keep exploring.